Bitcoin hit $70,000, made headlines, and everyone seemed to be talking about to the moon. But most Americans who jumped in chasing the hype ended up losing money. In this video, I'm going to share the one rule every beginner must follow before buying crypto and how to protect your money from emotional mistakes. Hello, I am Nate, and I work at Pumas Bank. Over the past 10 years, I've seen people make both smart and catastrophic financial decisions. Today, I'll show you how to approach crypto responsibly. Cryptocurrency is unlike any other investment most Americans encounter. Bitcoin, Ethereum, and other coins are extremely volatile. Prices can skyrocket in a week and collapse the next. Headlines show the highs, but the reality is that retail investors often enter markets at peak prices, driven by hype and FOMO. Without preparation, these rapid swings can lead to panic selling, emotional stress, and financial loss. Understanding that volatility is normal in crypto is crucial. Viewing crypto as speculative, not guaranteed, helps beginners avoid making impulsive moves that could harm both short-term finances and long-term wealth-building strategies. The most important rule for any crypto beginner is simple. Only invest money you can afford to lose completely. This may sound basic, but its importance cannot be overstated. Many Americans use funds intended for bills, rent, or emergencies to chase short-term gains, and when prices drop, the consequences are severe. By only using disposable income, you remove emotional pressure and can make rational decisions. This rule also encourages research and patience, allowing you to learn about blockchain technology, coin fundamentals, and market trends without jeopardizing your financial stability. One of the biggest traps in crypto investing is emotion-driven decisions. Humans naturally fear missing out, and social media amplifies this feeling. When Bitcoin soared past $70,000, countless beginners bought at the peak, only to panic sell during corrections. Emotional trading almost always leads to losses. By sticking to your investment rule, only risk money you can afford to lose, you reduce stress and allow rational thinking. Long-term growth comes from discipline, not reaction. Learning to detach emotions from your investment strategy is the difference between surviving volatility and suffering financial setbacks. Investing in crypto isn't just about buying coins. It's about understanding what you're buying. Platforms like CoinMarketCap or Binance provide valuable data on market capitalization, supply, and recent trends. Beginners should focus on reputable coins like Bitcoin or Ethereum before exploring high-risk altcoins. Consider dollar-cost averaging, where you invest fixed amounts periodically, reducing the risk of buying at a peak. Research also helps you spot scams, avoid hype coins, and identify projects with real-world utility. Knowledge, combined with your investment rule, turns crypto from a gambling game into a calculated risk with potential long-term rewards. Even within crypto, diversification is key. Placing all your funds in one coin exposes you to massive losses if that coin crashes. Spreading your investment across several reputable cryptocurrencies or even other asset classes reduces risk. Americans can balance crypto with stocks, bonds, and ETFs for stability. Remember, crypto should remain a small portion of your portfolio. Diversification protects your capital, helps manage emotional stress during market swings, and allows you to capture growth opportunities across different markets. Discipline and strategic allocation are far more powerful than chasing every trending coin. Many beginners make the same mistakes repeatedly. They chase hype, ignore fees, buy at peaks, or trust unreliable sources. Another trap is over-leveraging, using borrowed funds to invest, which magnifies losses. Beginners also neglect security, falling victim to phishing scams or unsafe wallets. Understanding these risks and sticking to the one rule prevents catastrophic outcomes. Patience, education, and discipline will save you from costly errors. Remember, losing a small amount you can afford to lose teaches lessons without derailing your financial life. Avoid shortcuts and focus on sustainable, informed investing. Cryptocurrency is not a guaranteed get-rich-quick scheme. The real opportunity lies in a long-term perspective. Holding through volatility allows compounding gains and benefits from market cycles. Analysts predict potential Bitcoin growth over the next few years, but these predictions are uncertain. Beginners who panic sell during dips rarely see these rewards. By combining your rule with research and patience, you can ride market fluctuations while minimizing stress. Think of crypto as a high-risk tool in your broader financial plan, not the foundation. Long-term thinking is the difference between short-term losses and future gains. Beginners should use reliable platforms like Kraken, Binance, or Coinbase to manage investments. These exchanges offer security, educational resources, and easy tracking of portfolio performance. Tools like wallets, alerts, and portfolio trackers help monitor price movements without reacting impulsively. Avoid apps or websites promising instant profits or guaranteed returns. These are almost always scams. Using the right platforms allows beginners to focus on learning, research, and disciplined investing. Technology should support your rule. Only invest disposable income and keep emotions out of trades, while staying informed about market trends safely and efficiently. Investing in crypto tests emotional resilience. Beginners often experience stress, fear, and FOMO, especially during sudden price drops. By mentally preparing for volatility and reminding yourself of the one rule, you can maintain composure. Treat crypto as entertainment with potential upside rather than essential money. Journaling trades, setting goals, and reviewing investment outcomes objectively strengthens mindset. Emotional resilience allows you to learn from mistakes, adapt strategies, and participate in the market without financial or psychological harm. Your mindset is just as important as research, allocation, and strategy. To wrap up, the single most important rule for any crypto beginner is only invest money you can afford to lose. Stick to it, combine it with research, diversification, and a long-term perspective, and you'll navigate the market safely. Avoid emotional decisions, scams, and hype-driven trades. Crypto can offer growth opportunities, but discipline and preparation separate successful investors from those who panic and lose. If you want more USA-focused investing tips, beginner strategies, and market insights, hit the subscribe button, like this video, and turn on notifications, because smart investing starts with knowledge and patience.